Good evening, everyone. Today we have Tony from our Colombo team. Welcome, Tony, to Ask Grit.
How you doing, Navin? Good evening.
Excellent. I'm doing excellent.
Excellent. Okay, so good afternoon and good evening to all our viewers from all around the world. And it's good to be back with you, Navin, obviously with this talk show for the first time for 2022.
Same here.
So what's going on, Navin?
A lot is going on with the start of 2022. It's all happening.
Brilliant,
so again, for the benefit of all our viewers, the objective of this show is to educate you and answer some of the questions we get during the week so that it will add value to you. And you can learn so much from other people's questions. And while we are going on, if you have any questions, please feel free to join our Facebook group and ask the question, and we are going to answer them for you. What have you got?
Yes, so too, very interestingly, like as you have already spoken in some of your videos, the mortgage rates are something that, you know, everybody is talking about. Rather, it's been the word on the street in terms of the Australian property markets. Now, I do understand that there are certain fixed mortgage rates are being picked up. So eventually this will have an impact on the capital gains or the profitability in terms of, you know, investors moving in. So now why don't you elaborate a little bit on it to start up with?
Sure, you're right. Some of the banks have lifted the fixed rates marginally, and that doesn't mean the interest rates are going to skyrocket. Australian Reserve Bank, the cash rate is 0.1% right now. It's all-time low, and it's been the case for the past 12 to 15 months. And what all the economists are saying is interest rates will remain low until 2023, 2024, which I think will be the case.
Brilliant.
Now, even if there is going to be some interest rates hikes, it's going to be very, very small. And there's so many other factors which the Reserve Bank will consider before lifting up the interest rates. It's not only you have to look at the GDP, you're going to be looking at the unemployment, infrastructure projects. There are so many other factors the Reserve Bank will look at. So it's not going to happen overnight. It's going to, even if it increases for an investor or a home buyer, the impact is going to be very, very minimal. I mean, all-time high in Australia has been about 17%. That was in 1990. Average has been about 5 to 6%. But right now, you're looking at between 2 to 3% for home buyers, 3 to 3.5% for investors. Even if this increases by, say, 0.25 or 0.3 or 0.5, it's not going to be a huge impact in the long term. But interest rates will definitely rise. It's not going to stay at these rates for forever. But it's like the media says, it's not going to skyrocket overnight. It's going to take at least 2 to 3 years.
Brilliant. There you go. So as the expert says, you have the next short to the midterm for you to maximize on your profits. Even if the rates pick up, it's going to be pretty minimum as per Navin's advice. He's actively trading in the market, so he gets into all the pipeline of sources which are very, very firm on that. He makes his decision on behalf of all of us, as we are a part of his team, and we convey the message to all our investors all around the world. Now, one thing, Navin, now for foreign investors, even if the rates pick up once more, the mortgage rates, you believe like it will pick up something in about 0.5, 0.2, 0.3. That's what you're looking at even after the next, say, 2.5 years.
Yeah, that's right.
That's what you're looking at. Brilliant.
And also, even when you go to the bank, although they are lending at, say, 2.5% or 3%, they'll be assessing you around 2.5 to 3% more. So they'll be assessing you around 5 to 6% to make sure you can borrow. So from From an investor's point of view, your lending will be on par, and there is no risk to you. And in terms of forecasting, budgeting, what we do is we always take a ballpark figure around 5% for all our calculations, so that you are not at risk. Although we are looking at 2.5 to 3.5% right now, if you do all your maths around 4.5 to 5%, you'll be safe for the next 10 years. And that's what we do for all our investors.
Sounds good. Sounds good, Navin. Fine. Now, as you know, my questions are based on concerns of my investors that I, speak to on daily basis now. And I have a good, a pipeline of clients from all around the world who are very, very interested in parking their funds, obviously, to invest in the Australian property market. Now, is there any other factors which will positively impact on the market over the next short term to the midterm, Navin?
Yeah, for sure. We should be looking at population growth. Due to COVID, population growth has been quite low because there's no one was coming into the country. And as we go along to 2022, 2023, the borders will slowly open. Now it is open for citizens and residents to come back. And students are back. So student population is going to play a major role in 2022 because the rental demand we are already seeing is going to skyrocket. There are students who are struggling to get apartments for rent, and this will be the case as we approach this semester, which is in March, and the next semester in May, June. So that's going to have a huge impact. And at the same time, there's so many infrastructure projects going on all across Australia. If you look at South Australia, there's a lot of mining boom happening there. Melbourne, there's massive infrastructure projects. Sydney, Brisbane, Olympics are coming up. So overall, there's massive infrastructure projects going on. And the other factors is economic stability. And so we're recovering from COVID. And I think politically, it's a stable country. All these factors will come into play in terms of your investment.
There you go, people. So the markets will turn out to be, pretty lucrative on your investment ideas if you were to, step in now and have a long-term plan to, to slip on your investment in the Australian property market. That's always the case. The fundamentals are looking so strong, just like Navin explained. Now, Navin, just on the same note, you probably answered this question halfway through. So the increasing numbers in student migration will impact the rental yields, you believe. Are you talking about the CBD in particular, or the students are mainly diversified into the nearer suburbs? What are your slight predictions on this? I'm talking about directly impacting on the CDB rental yields.
Yeah, mainly on the CBDs, because that's where most of the universities are. If you look at Melbourne, there's about 3-4 universities in the CBD. Having said that, there's Deakin University in Burwood, Monash in Clayton. So these pockets will also get filled up. At the same time, if you look at Canberra, you get the ANU in the CBD and Canberra University in Belconnen. So, and same with Queensland and Sydney. So all these pockets where close to universities are, you can expect rental yields to go up. Especially in Melbourne, it has been quite low due to COVID because there was no students coming in. So you can expect the rents to go up in 2022.
Yeah. So that's great news to those who are looking at, picking up something in CBD, an apartment, obviously, to looking for a higher rental yield. That will be great news for the next, say, midterm to come. Now, my next question is Navin, what would be the most competitive price in terms of a townhouse in Melbourne? What I'm asking is if somebody were to be looking at a townhouse, what is the medium size of a price in Melbourne right now in terms of a townhouse?
Yeah, if you're looking at in the 10-kilometer radius, you're looking at about 800 to 900,000 as a median for a townhouse.
Okay.
Having said that, there are townhouses in the suburbs. We have some townhouses in Truganina for about 454,000. That's definitely a bargain. You cannot simply find anything for that kind of price. But if you go to the suburbs, you're looking at 500 to 600,000. If you're looking 2 kilometers within the CBD, you're looking at 800 to 900,000.
Okay, now my question on the same one. Now, Truganina being 25 to 28 minutes of a drive from the CBD, like on the same neighborhood, if you were to find like many other stocks of townhouses, you mean to say they would more often start with something like 550, 600,000 Aussie dollar range, or even
at least 500,000. Yeah,
okay.
At least 500,000, especially in that 25-kilometer pocket.
Now this is like about half an hour away from the CBD.
Yeah.
You're talking about.
Yeah.
So if you talk about a slightly further, like say about 45 minutes or let's say 1 hour, would you have townhouses still? I mean, do you have a stock of townhouses?
Not below 500, no.
Not below 500. Okay, excellent. Fine. What are your predictions about Canberra in terms of rental yields and capital gains over the next mid to the long term now?
Yeah, Canberra has been very resilient throughout the COVID in the past, and it will be the future. You're looking at 6 to 7% rental yields in Canberra, and that will continue to be. And the reason for that is there's so much of demand from professionals, and there is a significant undersupply of apartments. Another factor in Canberra is the gap between an apartment price and a house price is massive. If you're looking at about 500,000 for a 2-bedroom apartment, you're looking at in the same suburb, you're looking at about 1.5 million for a house. So when that happens in anywhere in the world, two things has to happen. Either the house price has to come down or the apartment price has to go up. And houses will never come down with the current demand in the market. So the apartments can go up. And rental yields have been very strong. It's not only students, but professionals. There's a lot of professionals, a lot of government workers who occupy a apartment, and the rental demand will remain strong in Canberra. It's a phenomenal market.
Brilliant, brilliant. Yeah, that's great news for those who are looking at Canberra, in particular the foreign investors. Now, so my next question was, I mean, you have already answered my next question that I had in line. So you believe that definitely it'll, right now you're looking at rental yields being as high as 7% per annum, so it'll continue to do so.
Yeah, 6 to 7% is definitely possible in Canberra.
Excellent. Okay. Navin, what are the best investment projects that you have currently in terms of house and lands, and which city are they? Like, briefly, if you could name 1 or 2.
Yeah, right now, I would say as an investor, you should be looking at Adelaide and Brisbane right now. There's so much of potential. We have a variety of investment KPIs or performance indicators for the property market. It's not only 1 or 2 factors, but we go through about 30 plus factors. All those boxes have been ticked for Brisbane and Adelaide for a variety of reasons. One is infrastructure projects. There's mining happening in Adelaide. There's Olympics happening in Brisbane. And the demand is going to continue to be the same. And you can have an entry price of about 450 to 500,000 in Adelaide and about 500 to 600,000 in Brisbane, which you cannot do in Melbourne or Sydney right now.
So now, in one other question, it's a sort of a similar sort of a question to the same topic. Now you mentioned Adelaide as well as Brisbane. Now, keeping those aside, can we call that the Melbourne's demand on house and land, so in general about real estate prices, will keep continuing?
Of course,
the same factors.
Of course, it will. It will definitely continue. I mean, even after the New Year, It's the same. Both Melbourne as well as Sydney. I think it will continue for the first half of the year. The investor sentiment is very high, and fundamentals are very strong. Once the borders open up, the population will grow, and at the same time, the infrastructure projects and the consumer spending is going extremely well. So I think the fundamentals are very strong in Melbourne as well.
Yeah, just to confirm once more, Navin, I believe the borders were open by December, meaning like the students as well as the general migrants could be in a move towards Australia. I mean, people are moving in already. Is that right?
Yeah, borders were open for students, citizens, and residents, and parents of the residents and citizens.
Okay, all right. Excellent. Okay. Now, do you believe while the mortgage rates are on the rise, the fact that population increment happening continuously along with infrastructure development will still allow the investors to stand on, sound capital gains? Now, as we know, we were looking at anywhere over 40 to 15% of an price appreciation as a whole, the house prices last year, right? So, even if, what is your predictions as a percentage return if somebody were to be looking at the next year?
Yep. Last year across Australia, appreciation has been 21% per annum. That's you cannot expect 22%, 21% to happen every single year. But if you look at the statistics and the data for the past 30 years, average house price growth in Australia is about 7% per annum. And that will be the case for the next 2 years, 3 years, 5 years, 10 years, 20 years. I mean, for investors, the main point to note is property is not a sprint, it is a marathon. You got to hold on to the property to get the maximum benefit, but you can expect same sort of return, 6 to 8% per annum return in the next 10 years, I would say.
Brilliant. So you mean to say it could go as high as even over 15%, but on a minimum idea, it could go as low as 7% as per the track records in the history.
Yeah.
Excellent. Are there any potential investment projects which you are looking at in Canberra over the next short term?
Yeah, there's a few new projects coming in. One in the CBD that's yet to be launched, but it's going to be a really, really good project. It's going to be very close to the ANU. And this is like Belconnen, close to Canberra University, the shopping centers. Those are really, really great spots. We had apartments we rented out in one day. So those are dream for investors, and that's what we focus on. Those are the pockets in Canberra, Belconnen or the CBD, close to CBD, and also Phillip or Wooden, which is about 10 minutes from the city. That's another really good pocket to invest in Canberra.
Brilliant. There you go. If any of my investors watching this program, get your funds ready. When are you looking at this project to be launched?
It should be launched in March.
There you go. Excellent. We are looking at a quarter more. So that's great news. I believe these are apartments, right? Like you said?
Yeah.
Brilliant. Okay. My final question, Navin, what is the median house price right now in Melbourne?
It passed $1 million.
Brilliant.
It's not cheap anymore.
That's wonderful to hear. So Navin, that's pretty much about the questions that I have.
Let's see whether we have anything else. All right. Yeah, one more. What strategies can I use when I don't have a deposit for an investment property? That's a tough one, but I assume you have an own home. You must be having a mortgage on your own home. If you have collected some equity on that property, you can definitely get that equity out. Say, for example, you would have bought the property for 500,000. It might be 700,000 right now. Out of that 200,000, you get 80% out, which can be used as a deposit towards your investment property. And the other option you might have when you don't have a deposit, if you have a good superannuation balance of 150,000 or more between you and your partner, we can help you to buy a property through a self-managed super fund. So those are the two options you have when you don't have a deposit. Hope that answers the question. Hope we clarified your questions, and we are going to seeing you again in another week, every Thursday, 5 p.m. Australian Eastern Standard Time, which is Melbourne and Sydney time. We're going to come into you live with one of our fellow team members talking about property investment, property management, whatever you want to talk about. We'll be answering your questions. Before we leave, we are doing a world tour. We are starting off with Sri Lanka. There's first event happening on the 29th. Watch out on our social media channels. The schedule, it's going to be a jam-packed event schedule for the next 3 to 6 months for us. So hopefully we can see you in your city, in your territory. Until then, we'll see you next week.
See you, everyone.